All right, good morning and welcome back to the Money Advantage podcast. This is Rachel Marshall, and by now you are seeing four familiar faces. I'm Rachel. We've got Bruce, who's been on the podcast for, Bruce, I think we're going on 8 years. I don't know. I cannot keep it straight. It's been a long
I think,
time.
yeah, I think we're in the eighth year.
And Becca, Wilhite, and Joe DeFazio are members of our team who serve clients, and they've been on the podcast with you now. Joe by himself once with Bruce, and then I think this is your third time in a group, and Becca, I think the same. Is that correct?
Pretty close. Yeah, something like that.
That's awesome. Welcome, Becca and Joe, to the podcast today.
Thank you very much.
Yeah, happy to be
So,
here.
so let's go ahead and dive in. We've been doing this series that really came about because of something that you guys, Becca and Joe, had shared in terms of just there's a lot of conflicting information and opinions and myths and legends about infinite banking, and there's the truth. And sometimes it can be really challenging if you are an honest person who is looking for the right information, facts to make decisions on. It can be really difficult to sort through, is it he said, she said? Is it someone's opinion? Is it someone, has a slight idea about something to do with infinite banking and they're sharing their positive or negative emotion about it? Or is it really something that you can stake your decisions on? Is it factual? And how do you sort through all of that information? It seems like everyone has something to say about infinite banking. And so that's why we're using this platform to be able to really dive into and dig into those concepts that sometimes people can get stuck on when it comes to infinite banking. And so this is, I think, the third in this series that we've done so far. And today we're talking about where's the bank with infinite banking. And so I just want to, first of all, thank you guys for bringing this idea. I saw that, Joe. Where is it? Where is the bank? So thank you guys for bringing this idea to the forefront so that we can really help everyone who's listening, whether it's today live or listening later on the podcast or listening in 3 years from now, really be able to have the context to make healthy, solid decisions. So thank you guys for that.
Yeah, I think the thing that I I want everybody to understand is that if you really just want the truth, you should just go to the source, and that's Nelson Nash. And the Becoming Your Own Banker book does a really good job of laying the foundation. But also, if you go to the Nelson Nash Institute's YouTube channel or the infinitebanking.org website, you will actually get the truth that's not sensationalized. And I remember Nelson saying that to me on several occasions. He would just simply say, Bruce, there's no need to sensationalize this. It's good the way it is. Unfortunately, in our social media age that we are in, people need to get attention. So they sensationalize things, either out of incompetence, which you can somewhat um, understand because they're not trying to deceive, they're just not at the point of competency yet, or worse off. And I think there's frankly a lot of people like this. They're actually doing it on purpose. And then it comes into two categories from doing it on purpose. You're doing it on purpose because you just want to simply get the clicks and then you'll straighten people out later. It reminds me of politicians that say, oh, I'm a good person, but I have to do it like this to get into office, and then I can actually change things. So they sell their soul early to get in office so that they can change things. Well, what they forgot is they've already sold their soul, so they're not gonna be able to change things. So I do believe there's a facet of people that say, "Hey, I'm just gonna do this clickbait type of sensationalism, get you to click on this, and then I'll tell you what the real story is." And then unfortunately, there are people that they don't care. They're just going to do anything they can to actually make the sale. And those are the people that I think most people have to be really, really leery about, because you can make a mistake. And actually, the Nelson Nash Institute wants to try to weed those people out because they give the entire, not just the becoming your own banker or the infinite banking concept community a bad name, but they give insurance products a bad name. And so that is the road we are on at the Infinite Banking Institute. We are not there yet. We're taking as many steps as we can. It's been a monumental task, but I think the people that are doing it correctly, like ourselves, and we have to clean up our language every once in a while too, because you get lazy with your language. But we are constantly calling each other to task. We're constantly leaning on each other to explain things better to the general public. But if you just go to the source, and you don't have to worry about whether you're doing it correctly or not.
Bruce, I'm just going to add on to that before we kind of dive into our topic for today. So I think what can be really challenging, and I'm going to just relate this to the Bible, because what's really interesting, we've talked about becoming your own banker being like the Bible of infinite banking. It can be really similar if somebody is going to dive into a relationship with Jesus and digging into the Bible and trying to understand it. And there's so much, I mean, it's huge. It's a gigantic volume. It can seem really vast and difficult to understand, but you can simplify it, but you don't need to sensationalize it. And I think what really happens is that if you are seeking to understand something, you will find the source and you'll find the truth and you'll come with the right perspective or the right, I guess, position to that information so that you're really trying to understand. And really, that's what we're wanting to help you do if you are looking for information about infinite banking. And Bruce, I'm going to just share one other kind of person who's talking about infinite banking. And Becca, I'm going to have you speak to this in a second as well. But there are the people as well who, I mean, everyone's heard of it now. It's becoming so popular. So you've got all the people who think they know what it is and who have written it off because they say, oh, I don't like this, or they know a tiny bit and they just say, oh no, that's a bad whatever. That's a bad investment. That's a bad strategy. That's just a, whatever, fill in the blank. But they then, because of their position of authority as a financial advisor or as a leader in a certain space, people trust their opinion, and people don't even necessarily realize that they're listening to an opinion of someone else, taking on that opinion without even understanding the basis of that. Becca, would you just share a little bit around that idea?
Yeah, I mean that's kind of where I came from. I can vividly remember a friend mentioning this to me, and I was like, just absolutely wrote it off from the get go because it had to do with whole life insurance. Now I couldn't tell you how whole life insurance worked. I had no idea. All I knew was that certain people that I followed said that that was a bad idea, that was a scam. And in the realm of like modern financial planning and or people who have just maybe have heard of this, have a cursory knowledge of kind of what it is, I think a lot of the error comes because they're still seeing it as an alternative, like something to do instead of what you're doing. Like you should do this instead of investing. You should do this instead of, XYZ, whatever it is that their preferred method is. But that's not what we're saying at all. We're not saying this is an either or. We're saying, hey, this is a great foundation to build your financial life upon with certainty, with guarantees, with you don't have to wonder what it's going to do, which way it's going to go. It's going to go up. And so if you can build from a place of certainty instead of from a place of, well, I hope it works out, then it gives you a lot more options and a lot more peace of mind. So, I think a lot of the misunderstanding is around that basic, just you're filing this in the wrong place as just one more in a list of options you have when it comes to your finances. So
That's powerful. Oh my goodness. Man, I didn't even know all that was going to come out. That's awesome. So let's go to this whole idea of where's the bank? Because I think what happens when somebody hears the term infinite banking, they say, oh, banking, I hear, you know, uh, Bank of America, Wells Fargo. I hear bank that sits on the corner of my street and has the, brick and mortar beautiful building. You walk inside, you can talk to a a bank teller, you can talk to the banker, you can store your money in this bank, you can automatically deposit it, you can write checks out of this bank, and they think, oh, that's banking. Banking is a brick and mortar building, a place that I can use this other entity or this other organization for the purpose of putting my money into so that I'm not storing my cash. And instead, I can go paperless. I can use a credit card or a debit card to access that money. And it's all electronic. But that's where I'm understanding that banking is and what banking means. I would really like for you guys just to share your thoughts on why somebody might be asking that question. Where's the bank? Almost with that incredulous perspective. Like, this can't possibly be banking. It doesn't look anything like the banking that I know in my real world.
Joe, you want to jump in or you want me to go ahead?
Yeah, yeah, sure. Well, one, I think going off of what Becca just said, I think the problem starts with classification, misclassifying things. And um, like in Nelson's work, around page 20, 19, there's a chapter anyway called Creating a Bank Like the Ones You Already Know About. He addresses this very concern in the book, in the original work, where he's talking about this isn't like you're going to the banking commissioner and applying for a bank charter, and he goes through a big example of what it would take if you were actually going to start a real bank, brick and mortar bank. And he contrasts that with banking is just a word that means like the collection of something, the storing up of something. And he often quoted like, or he would ask, if you're driving down the road and you see piles of snow, what would you call that on the side of the road? A snowbank.
Mhm.
If you go to donate blood, where do they store the blood? In a blood bank. And even
A
anyway, he would
river
give
bank.
right. If he
Mhm.
would give several examples to show it's just a word that means this, and we're going to just use that literal language to define what we're doing with our money, what we're doing with our cash flow. We are banking our cash flow. We're storing it up somewhere in an ideal location for a friendly environment conducive to us being in control and building all the wonderful things Becca was highlighting. Financing and purchasing the major things in our life, financing and purchasing investments in our life, things of that nature. As opposed to, like, it's more of a ground level fundamental aspect of the plan, as opposed to a this or that, a diversification type of thing. It's the platform from which you do all of the other things. It's not a piece of the puzzle. It's the thing the puzzle's made of. Um, it's the
That's
underlying theme.
that's powerfully said because Joe, just to jump on top of that, I think so many times we think of, I mean, maybe a chessboard, and our money are the pieces on the chessboard, and we're making moves, and we're saying, I'm going to put this money here, and I'm going to put this much risk percent on it because I believe that this particular money is going to turn this rate of return and turn into this amount of money in this year, and I'll be able to draw this much percent off of it so that I can have this amount of income. And all of those are variables, right? And we're playing this game that we think that we are the person, the opponent, or the person playing the game, and we're moving around our money as these little chess pieces. But you're saying infinite banking is not a chess piece. That's one of all of the other chess pieces. It is literally the board that you put the chess pieces on. And if you can reframe the whole context, you can recognize that it can become the system.
Yeah, it's if you take a traditional chessboard, and some people would say, would you rather have all queens? And it's like that's one way to look at it. I would say, well, yeah, you could say all queens, and then the board quadruples in size, and you have how many more queens than the person over here? It's like that's the expansive, abundant, infinite nature of this. It's not limited to saying, oh, you get two queens instead of just one. It's not an Uno card where it's like a draw four magic card and the rest
Mhm.
of the deck is right. It's the cardboard the cards are made of. It's the rules of the game that you're playing. It's the environment. It's not a thing on the board.
Yes. Oh, that's really, really, really powerful. I mean, we could just stop the live stream right there and call this a day because I think you made the point. I mean, that's just something so profound to think about. There's another picture that I've been pretty familiar with. It's through a program called Circle of Wealth, and some of you guys might have seen it. Probably if you're listening, that this might not be familiar to you, but just at a glance, I'm going to explain. It's basically like looking at your, I don't know, your water pipe system that flows through your house, and they have water coming in into this one big large tank, which is all the income that you're ever going to have in your life, and it flows through this other pipe that has a tax valve, and this is some drainage or leakage that comes off of this income that you make, and then you have this choice to either spend in your current lifestyle and have that money be consumed and gone forever, like going down the drain, or you can pump it up into your future lifestyle in one of two tanks, which is either savings or investments. And what's really interesting is that, first of all, most people think of infinite banking as something that fits in that investment category. Like, do I invest in infinite banking, or do I invest in life insurance, or do I invest in the stock market? Do I invest in, do I put my money in Roth in these kind of stocks in the S&P 400 or 500, or do I put the money into real estate? And they're thinking again as which thing do I choose? The challenge is it's not in the risk tank. It's not an investment decision. It really is a place to store safe, liquid, available cash that modifies the entire pipe structure because you change the tax, you change the way that you spend in your current life, you change the way that you're planning for the future, you change accessibility for every single financing decision that you have. And so yes, it is the system. It's not a piece of it.
I really like that. If you're, I played a game as a kid. It was called Shoots and Ladders.
Mhm.
I visualized like if you were to go that route to the infinite banking concept, it's like a ladder that jumps 50 steps. It's like the cheat code that gets you way, way, way ahead, where you don't have to go through the onerous taxation, regulation, piping to get over there.
Ah, that's awesome.
Mhm.
So, Bruce and Becca, what have you got? What have you got on that?
Well, I think to go back, first of all, why banks were established. Banks were established because of people having true wealth in the form of precious metals, mostly.
Mhm.
And they were afraid if they gathered too much of it, they could not defend the precious metals. So the first banks were actually banks that said, if you give us the money, we'll protect it, but you got to pay us to protect it. So you were actually paying them to protect the money from marauders, bad people, so on and so forth. And then the people at the bank started to realize, hey, we got a lot of gold right here, and not everybody comes back for it at one time. So why don't we actually give loans of gold to people, and we'll charge them an interest rate and we'll make more money? And they started doing that. And then they thought, well, wait a minute, we're making a heck of a lot more money this way. We need more gold in our bank. Well, the best way to get more gold is not to charge people to hold their gold, but to influence them, to incent them to bring the gold to us. So we're going to pay you an interest rate to do that. That's how a physical bank started. Nelson, Carlos, Bob Murphy, when they first started the
Which, by the way, are all, yes, you're telling who they are. If our listeners aren't familiar.
yeah, they're all established the first board at the Nelson Nash Institute. Um, and then they decided, if we're going to have a practitioner's program to actually explain things correctly, we want to go to the insurance companies and we want to get their take on the process of banking, which we call infinite banking, the process of banking using whole life insurance, what Nelson talks about in his book, all Becoming Your Own Banker. And they were very, very frustrated as they did their mutual insurance company tour, that as Nelson talks about, not fondly in his book, about the gophers at the insurance company, that they just don't get it. That we are not saying that the insurance company is a bank. We're saying that you can use a whole life product to mimic the banking function. And that's where Nelson came up with what Joe already talked about with the different types of banks. And so the word bank doesn't mean every time a physical location where you put your money. It's also a process that you can do. And they got very, very frustrated. And the more that the infinite banking concept took off, the legal people at the mutual insurance company said, we've got to do something so we reduce our liability. So now most of the companies actually put in the illustration, this is not an actual bank, which to me, it's kind of like when a drug company puts out a drug commercial and says, if you're allergic to this drug, don't take this drug. Well, no kidding. Or they will say something like, don't drink bleach, something that should be obvious to the general public. So that then does show you, though, that they feel like there's a tremendous amount of liability because of people not telling the truth to people about it's a process. It's not an actual bank. And we've had people that have actually heard about, we haven't personally, but heard about other people getting the policy and not really realizing that it was life insurance. Now, how you can do that, I have no idea. I mean, because you go through an application, a process, and so on and so forth. And they also use the word deposit instead of premium, which also gives the idea that it's a physical bank. So if people understand the history of banking, the purpose of banking, the rigidity of the banks themselves, the legal feelings that they have to protect their own bank, and I think that's one of the things that they wanted to make sure the banks themselves want to protect, and the insurance company want to protect the liability, then I understand why the general public's confused. Becca, you want to add anything to that?
Yeah, we talk a lot about the curse of knowledge. And in speaking with clients, a lot of times we'll use this jargon, or you hear it out on social media, and maybe we assume that people know, and sometimes they don't. We're not speaking the same language, right? And so I think the banking function is one of those terms that maybe we throw around a lot, and that can be really confusing. And I think everybody kind of has their own aha moment when things kind of come together. But for me, that whole concept of the banking function seemed so just out there and hard to grasp, until I heard this explanation. I can't remember where I heard it. We borrow things from different people all the time, but a guy I was listening to gave the example. He just basically said, if you break it down, banks do three different things. They provide a way to facilitate transactions, give you a place to store your money, and they provide financing. I mean, pretty much everything a bank does can be broken into those three categories. And they do a really great job of financing or providing a way to transact money. I mean, I'm glad I can swipe my debit card at the grocery store, right? That's very convenient. I'm glad I can write a check to the babysitter or whatever it is. So let's use them for that. That's very convenient. They're very good at that. But the other two are where they make their money. If I will store my money there, and like Bruce was saying, give them the ability to loan that out to other people. And if I will go back to them when I need financing for something and pay them interest on money that they have, other people's money that they're loaning to me, then that's really what we're talking about, controlling the banking function. If we can control those two things, if we can change where we store our capital and how we finance things, then we can capture the money, what the bank's doing that's very, very profitable, and turn that that benefit towards our families instead of these banking institutions. So it's not that we're mad at the banks. Like, we say, hey, that's really smart. That's a great business model. Could I do that? Yes, I could. And so that's when we talk about recapturing the banking function. Let them do what they do well. Let's use the banks for what's convenient. I actually had a client who used to work at a bank, and I was talking through this with him, and he said, "Oh yeah," he said, "checking accounts are complete loss leaders. Like we didn't make any money on a checking account. That was just to get your business for those other two things." So, infinite banking allows you to control the money making aspects of the movement of money. Yeah, go ahead, Joe. I see your thinking face on. Oh,
Joe, you're
but you're
muted.
muted.
Of course, of course. Man, that's so good. I think going back to something Bruce said, it was so, and what you're alluding to, like the idea of counterparty risk in that equation. And all that means is if you're on one side of a transaction, there's a corresponding opposite potential counterparty on the other side. The risk is they may do something that negatively influences you. So if you go back to Bruce's original example where you've got, Bruce has a bunch of gold and Becca knows that, the counterparty risk is this thievery that could potentially happen, where she's going to go at midnight and go steal all of Bruce's gold. Um, to solve that, that's why they were willing to put it at these banks, these official like Fort Knox type institutions that were going to guard Bruce's gold. The same thing happens at in regular we'll say financing. Okay, so when a bank lends money to Becca, their risk is that Becca won't repay. That would negatively impact. Becca's risk is the bank will change the terms on her to negatively impact her situation. Right? So there's always like counterbalancing risk there. When you choose to do this, it's kind of weird to think about, but you are on both sides of the equation. You represent the insurance company by allowing yourself to take loans without asking any questions to yourself, without changing the terms negative, like changing the terms adversely to yourself. And you're on this side receiving the capital to go do the thing. Right. So I love the three functions you highlighted. What is banking? Storing up capital, accessing capital, and replenishing capital. That's what we're focused on, not the checking account functions, the clearing of payment functions, the transferring between accounts functions. It's the storing up capital, giving ourselves access to capital, and replenishing the capital on the most favorable terms, the most profitable terms possible. I love it. Great stuff.
This really makes me think that, when you start understanding the process of banking, I like to think of there being this table, right? And this is kind of going to what you said, Joe, about the counterparty risk. When you look at the typical banking, there's this table, and you are on one side of the table, and the bank is on the other side. And the bank is in the position of saying, "Oh, I'll increase the interest rate that I pay you to incentivize you to put your cash in my bank." So they're calling the shots, they're calling the terms, and they're incentivizing or motivating what is in their favor, because there's two sides of this equation. They need you to cooperate with this. Otherwise, if nobody stored their cash in the bank, then the bank would not be able to be profitable the way that it is. So they know that it's valuable for them to get cash and to pay people to put their cash in the bank. They also then know that they can provide loans. They also have, I mean, we could go all day to expand upon the fractional reserve banking situation. I'm not going to go deep into that, but what is important to recognize is that they then have capital and they provide loans, and they're not going to provide a loan that no one would want to take. They want to provide loans that people do want to take at interest rates that seem favorable to the consumer, the person on the other side of the table, so that people on the opposite side from the bank will then borrow capital so that the bank can get these repayments back into their storehouse or their warehouse. And when you look at that, what happens is the bank is controlling, or they're calling the shots. They're setting the terms, they're setting the interest rates, they are deciding how much arbitrage they're going to make, they're getting the cash flow, they're taking way lower risk, and they're in a position of they get the interest paid to them, they've got cash flow on their side, they're controlling the capital, they decide who they're lending it out to, they're in control. And you, as a customer of the bank, are really on the other side of the table without a lot of control in your hand. You are at the mercy of the bank's decision. And what is really interesting is it's not even that you just swap sides with infinite banking. You don't just get to sit on the banker's side of the table. You actually are on both sides of the table. So you now are the recipient of the ability to use this powerful banking system, but you also are the one who's in control, controlling the capital on the side of the banker, where you have capital. You are deciding who you're going to loan it out to, how you're going to send out that capital and loans, how it's going to be repaid. And you are the one who's able to make the arbitrage. You're the one who is able to be in control because you are the banker on both sides of the table. So, man, I feel like when somebody understands the power that the typical banking system has, then that becomes this aha, this awakening to the understanding that we can be in the position of controlling the banking function and have it not be abstract, Becca, as you were talking about, and Joe, you mentioned as well.
The thing that I think banks are in a crossroads right now. They're trying to figure out where banking is going to go. I'm talking about physical, banks on the corner are trying to figure this out. There's a new I don't know if you call it proposal, a new way of doing business that is coming online, and I'm just been made aware of it by some of my younger colleagues, called ISO 20022. And it's basically, if you look it up, ISO 20022, it's a way that is going to revolutionize the current banking system by using both the blockchain and the stable coins to facilitate transactions instantly, instead of the overnight banking rate that we have, and we have to worry about clearing from another bank. We have to worry about the other bank pulling the funds back, so on and so forth. Everybody that's in the insurance business understands this, because of the one of the frustrating things that a lot of people have is when they use an insurance company, mutual insurance company, to facilitate the banking process, is when you make a premium payment, there's a delay before it actually gets credited to the cash value. When you make any kind of payment back, loan payment, there's always a delay because of the physical banks that are actually moving the transaction. Well, this this happens in a lot of things outside of the infinite banking concept when you're just doing transactions. So banks are now going to have to look. And by the way, there from my recent reading last night, there are some Federal Reserve banks in the United States that are now compliant with this, that will have the ability already to do this. So I don't think this is a if situation. I think it's a when it's going to happen situation. And when that happens, then the true brick and mortar bank is going to actually have to redo their business model. I mean, if one of the things that Becca said was absolutely true. Banks are really good at transaction between two parties, that you can rely upon. But there still has to be a human that does that. At least that's what they say to justify their fees all the time. But if you use the blockchain, there's a way that those things can happen instantly, and then banks are going to have to figure out another way that they can make money. And so I think that's another thing that people have to look at the differences between an actual physical bank and taking over the banking process. So that's something I think we're going to be grappling with in the near future.
Becca, I often think back to your book, The Beaver Bankers, and could you just talk about that concept that you used so well in your book to illustrate the idea of banking and what that means?
Yeah, well, I think in the book, just kind of the premise of it is that there's a stream that has, originally just flowed away forever, and then these beavers, what they do is they build a dam to create this pond that has everything they need to live and thrive in their little beaver tribes. I can't remember what they're called, but the same thing with us, right? The default, if we think of the money running through our hands, we're gonna have millions of dollars flow through our fingers over a lifetime. But the default is just to flow away to everybody else, flow downstream, flow to this person, that person, that institution, and you get to the end and you go, gosh, what happened to all that? Where did it all go? And so the analogy I was trying to use was when you participate in this or implement the infinite banking concept, it's kind of like setting up a financial dam in your life to capture some of that flow that we were just losing, and kind of recycle that. You could build up this pool of capital that could provide for everything you needed, if you do it at the right scale, right? Some people will say, oh, I'm going to put, $50 a month into this, and gosh, that didn't do anything. Well, yeah, you're probably right. But if you do it at the correct scale, and that's over time, right? You can start small. There's nothing wrong with that. But you develop and you build up this pool that provides protection, that provides for things that you need, easy access to get where you need to go. I mean, I found out things about beavers I never knew. They create these little tunnels and canals through the ponds that they create so that they can get to where they need to go easier. I mean, all these things. I just think it was a great picture of what we're trying to do. Basically, we're trying to capture what was previously escaping and use it for our benefit, just like the beavers.
You know, it's just such an easy way to understand. I think analogies, I mean, stories or parables, if you will, analogies, things that we can relate to in our real life help us to be able to make sense of concepts that might feel abstract. And that's exactly what your book does, even with the beaver pictures and all. So I love that you geared that to children, but I think there's something so profound with any challenging concept or anything that feels abstract or hard to grapple with mentally. If you can bring it into a child's world and be able to explain it clearly, it automatically begins to make sense for people who are adults. And so I don't think that we should even just relegate your book to the land of children's books. I think it's really for the parents of children that
I like to say sometimes it's like disguised as a children's book.
there
Hey,
you
you should read this to your kids. What do you think? Maybe you'll get
Brilliant.
something out of it too.
So
Brilliant.
a couple of our listeners this morning, Rob Braden, actually said he loves your book, Becca. And
Oh,
he said,
thank you.
the bigger the dam, the bigger the pool. We have
Mhm.
to start somewhere, though, one log at a time.
Yeah.
And this is, I think, one of the things that is most frustrating, not only to insurance agents, but it's also frustrating to the consumer, is they don't want to really change their habits because they're not going to see like this immediate great thing that they have. And Nelson talks about that human condition in his book all the time. We want it now. We want it to, we're a drive-through society now. What can we have now? And then we see on TikTok about how people are making 10%, a month, not 10% a year, but people are saying they're making 10% a month, which is 120% a year, which if they're making 120% a year, why aren't they just scaling their own business? Why are they then selling, the way to do this. There's a whole lot of things that are confusing in our society. So I think one of the things to take away from this is that Nelson preached directly and indirectly patience, that you have to overcome your own human condition. He talked about how it took him, you know, 30, or I'm not him, but it could take you 20 to 30 years to get the banks out of your life. It took him 17 years, I believe it was 17 years to get the banks out of his life. And yet people don't want to put away $500 a month because, well, I could be using that $500 to invest in something else. They do not see the compounding effect. We've talked about this. I think Becca, you or Joe were one of the first ones to point this out. I think it was actually Joe, that the compounding curve is not very sexy on the first part of the curve. But then the second part of the curve really takes off. But you can't have the second part unless you have the first part. And that's the part that people are not willing to do. And if you're not willing to do it, then you just keep doing what you've been doing and keep getting what you've been getting, because you're going to make excuses. And Nelson knew this was part of the human condition. You're going to just keep making excuses. You're going to just keep talking about how poor your life is, how you don't have any money, how all this money's flowing out of your control. You don't have any access to cash. My wife and I are thinking about downsizing our home. And the nice thing about it is the next home, we don't have to worry about going to a bank. We can just pay cash for the house. I mean, what a great feeling that is. We're in control. We can just tell people that we have an all cash offer. We want to be in this house in 21 days. We don't have to worry, oh, the bank going to approve us, or how much do we have to have for a down payment? What is our payment going to be? Now, I'm almost 62 years old, and I've been doing this since my dad bought the policy when I was born. It doesn't happen overnight, but yet everybody wants to happen overnight. You have to overcome the human conditions. And if you don't know what that means, by becoming your own banker and read Nelson's sections about the human condition.
So I think go ahead, Joe. I saw you wanted to talk. Go ahead, but you're muted. You're on mute, Joe.
Sorry about that. It's funny, Bruce is saying people want it now, and very few people could tell you what they want now. I imagine most people look at cash value. When you think what they want now is cash value. Um, I think you're at the start of your journey if you think that's the answer. I think you really need to spend time in this and understand what you're trying to do. If you listen to what Bruce was saying and what Nelson was saying, it's a 20-year transition from 100% third-party financing, status quo, what you're doing right now, to 100% private financing, right? To learn how to handle the policy, to learn how to layer in loans, to learn how to repay your system, to learn the disciplines. Because once you're in 100% private financing, there's very few guardrails. They're self-imposed. So you've kind of got to make up the rules as you go and learn what works and doesn't for you and your family and your situation. So it's the people that are you know propagating this idea that a 99.9% cash, is available day one, minute one, right after you pay your. It's like you didn't solve the problem. You didn't even address the problem. All you did is move cash to a cash like, you know, state within a life insurance contract. It's like that didn't solve the problem. That isn't actually the answer. It's a cash flow problem, not a cash value problem.
Hmm. You know what's really interesting? Joe, were you finished? I didn't mean to cut you off
Yeah, yeah,
before.
yeah. I'm done. I could go on for.
I think
I'm
what's
like Bruce
really,
Jr. I could just keep going.
that's okay. That's good. I think what's really interesting about all of this is that I'm gonna pull a few threads together. Bruce, you're talking about the, TikTok and the short YouTube shorts and the Instagram reel world that we live in, where everything is really small, small little sound bites or, snapshots in time. And, we live in a world that has, in all fairness, because of social media and because of the way we consume video content, our brains are all like ADD all the time. And there in terms of how long your attention span lasts, it's usually about 3 seconds. And if something doesn't catch your attention and compel you enough in 3 seconds, you're going to be watching something else or listening to something else. And the challenge with that is that we not only, I mean, if we're honest with ourselves, our attention goes to the things that are most flashy, most immediate to us, and that feel the best or that drive the most emotion in a really short period of time. That's why we can't turn away from the negative news. It's just, I mean, that's something that I feel like I've tried to distance myself from and not spend a lot of time there. But what's really interesting is the news media knows that negative news is better than positive, wonderful news that takes longer to read. They would rather a really compelling, super emotional, hard-hitting headline that jars us and that makes us then click on that to go read. So what's interesting is if you are the person trying to solve problems, you have to recognize that not only do you need to be willing to stay the course and stay the long haul, like Joe was just talking about, this 20-year process, you also need to recognize what the actual benefits are that you're looking for. So many times we think we know what we want, but we don't know what we actually want. And what we think we want is all the things that are most immediate that we experience immediately tomorrow. Things like, oh, I can pay off that debt. Well, that's something that's more immediate. And people make this decision because they think that it's the thing that they actually want, or getting the super high cash value day one. That seems more immediate. It seems like what's more important or more immediate. It's not this long, far off, have to wait for it, have to work for it result that you get in 20 years. The challenge, though, is if you know with certainty where you're going and you're on a path to get to that control, that position of being able to access and control your capital, the position of being able to earn guaranteed, consistent returns on your life insurance policy with certainty and have that kind of certainty in your life. If you know you're on a path to that, the immediate thing that you do get right away is the confidence of knowing that you're making the right moves, that you're not just guessing or batting at things and I'm going to pay off this debt over here. I'm going to go chase this high rate of return over here. I'm going to go make this move somewhere over here. And you have this disjointed, discombobulated, conflicted strategy with what you're doing. So all that to say, I think we need to recognize as humans, Bruce, you were talking about the human problem, but we need to recognize our nature as humans, that we have short attention spans, that we need to fight against that. We need to really pursue the things that are valuable in the long term rather than the things that just feel immediate or instantaneous. And then be willing to commit to something that we know is the right thing that will absolutely bring that peace and confidence today.
Great points. I do watch a lot of news, and I'll just say this: it drives me crazy every time they tout. And in today's positivity report, it's like they have to force themselves to do a 2-minute segment on positive, or they'll say today's positive story, and I'm like, oh my goodness, you actually
There's
have
only one positive story in the world. Yeah.
positive story, yes. But it's all based upon the fright and flight that we have in our brain system. So, Becca, you have something you would like to wrap up
Oh,
here?
I was, listening to you, Rachel, I was just thinking about the time's going to pass anyway. You're going to be banking with someone anyway. All we're saying is if you could make a few slight adjustments to where you bank and who controls that process, after that time has passed and along the way, but especially after that time has passed, you're going to be in a very different position than if you stay with the status quo and the path that most people go down because it's familiar.
So good. Joe, did you have some final words?
Yeah, it's piggybacking off of Becca. It's next time you're getting some type of financing, whether it's digital or whether you're going actually to a brick and mortar bank, and you realize they say we gotta, there's five people that have to all agree to give you the money if you do this and give us your W-2s and sign away this. And it's like just pay attention to all the little hurdles that they put there that you just have blindly accepted in the banking process in your life. And realize the alternative is you could just ask yourself if you should give yourself what you want. Like, how many people are going to say, no, I turned down my own loan to go on that family vacation? Like, it's like incredibly simple. The simplicity is like, I don't know, it's part of the hurdle. People are like, it can't be that simple. They want it to be more complex because they're so used. It's like Munchausen syndrome and Stockholm syndrome. They want it to be abused by the financial system. It's like they can't fathom that it really is that simple. Nobody else has to be in control of that function in your life. You're willingly giving it to someone else and can willingly, knowingly take it back and reclaim it if you choose. You have a choice.
This has been fantastic. So if you are questioning your life now as a result of this podcast, or whether you are, asking yourself some hard questions, or if you are in a position of really wanting to understand or take advantage and take that first step of getting into a life insurance policy, or even just exploring what that would look like and what that would mean for you and your family on a personal basis, we would love to talk with you. You can go over to themoneyadvantage.com. You can book a call at no cost on our advisor's calendar. And what that means is you're entering a conversation where we're going to be able to understand your goals, what's going on with you, and help you understand the basics of how infinite banking could work for you. So, that being said, please remember success leaves clues. So, model the successful few, not the crowd, and build a life and business you love. We'll see you next time.